My entire empire of wealth would not exist without a solid credit score. By the way, not my credit, but certainly somebody else's. Today, I'm gonna talk about how to build your credit in your 20s. Frankly, I became financially free at the age of 26, and it was because of how I've been able to borrow all of this money from banks for profitable real estate investments. Now, whether you're trying to increase your credit score for personal use, whether it's for business, whether it's for real estate, whether it's making money, today I'm going to be revealing how you build your credit score the most powerfully, and then also how you can use it to make a lot of money.
Won't you follow me into the jungle? Ain't no God on these streets in the heart of the jungle. Won't you follow me into the jungle?
You may have caught one of my recent videos where I hopped in the limo and I was taking my CEO on a journey of the first several homes that I bought. If you haven't seen that, you should click over here. And on this journey, I was talking about how I was able to acquire every single home, either using my credit like I did in the beginning, but ultimately everyone else's so that I could keep buying real estate. This is such an important conversation today as we talk about how to build credit in your 20s, because I've used my credit to make millions of dollars, and today I'm gonna show you how to do that as well. I get it, you wanna know how to build credit, but I've always gotta start with the why. Why should you actually build good credit? I've got three big ones for you. The first one is you can use good credit to get loans. And the better the credit, the more favorable the loan, like lower the interest rate or maybe even larger the loan amount. But also, you can use your credit to buy real estate. I'm not just talking about a home for you, that might be your goal, but for me, if you make a lot of money on one home, you might be thinking, how do I get 10 more of these? And guess what? Good credit can lead to that. And then number three, you might actually have that entrepreneurial spirit, right? Tons of millennials these days, they want ultimate flexibility.
I think you need to be more flexible.
They want to live life on their terms. They don't want to be stuck behind a cubicle working some kind of job.
Request claim on claim number.
So guess what? You can actually use good credit to get some money for a business. Now, to understand good credit, you have to understand that credit is judged by a credit score. Check it out. Banks need to know that you're trustworthy. And with every credit card that you get from a bank or credit union, they're going to report information about you and how you're using it to three different credit bureaus called Equifax, Experian, and TransUnion. And when a bank wants to do a financial background check on you to see if you'll pay back the money, they're basically going to check with Experian, Equifax, and TransUnion and say, how have they been in the past? Now, your relationship with these three credit bureaus is really not maybe all that different when a kid is having a relationship with a parent and is asking to borrow the really nice car. I mean, think about it for a moment. What kind of kid are you? Are you the one that meets curfew, or are you the one that maybe stays out too late or brings the car back with dents and scratches? Or are you the one that says, you know what? I gave it a wash, I filled it up with gas, thanks for the car, Dad. Now, your credit score, whatever that three-digit number is, tells the entire story of your history with credit, whether it's really good or really bad. And those scores range from the worst credit at like a score of 300 to the best credit of a score of 850. Would you like to see what the average credit score is out there? Check it out. Experian, one of the credit bureaus, came out and said that 38% of people have between a 661 and a 780. Basically, they've got good credit. However, you've got 23% of the population that is so good with their money that they have between a 781 and an 850. So these people have like the very best of credit. When I started building credit for myself, by the way, I fell in the 660 range. And with what I'm about to share with you in this video, within a couple of short years, I've been in this excellent range ever since then. On the other side, however, check this out. You have 5% of the population that has no idea how to treat their credit responsibly. Their score's between a 300 and a 499. They got to be watching this video. I'm going to be teaching you how to get that score right back up. Poor credit is between a 5 and a 600, and fair credit is between a 601 to a 660. By the way, if you're curious what your credit score is, you can get that information for free. Just go ahead and click this link right over here. Hey, do you want to know how I use my credit today? Let me show you what's in my wallet. Hey, that kind of sounded like a commercial for American Express.
What's in your wallet?
By the way, I love American Express because I have no limit and I can buy really big things. I actually have a trip to Alaska coming up, did a $25,000 booking, and of course it just went through like butter, which is really cool. All right, don't mind the mess. The underwear lying around. Just got back from a trip to Bear Lake. Don't mind the piles of money. By the way, check out what I just got in. Kind of cool. Okay, in my wallet here, most important credit card. Not the one I use the most, but this is my Cabela's card. And do you know why I like that? Dude, check this out on the ground over here. I just spent a lot of money yesterday getting all of my hunting gear because I'm going to Alaska on a big sheep hunt. I've been getting in sheep shape, which, is $2,000 worth of gear, not to mention really nice carbon fiber poles. But I actually got all of this stuff yesterday for free because I get 5% cash back as a Cabela's Black Club member. So basically I spend a lot of money intentionally so that I can maximize this and then I get to go on shopping sprees. But no, for business, I'm always using my Platinum American Express. And this card right here, it gives me like insane flight benefits because I'm always flying and traveling. That's one of the biggest reasons, but I also get discounts everywhere I go. It's all about just like smart, intelligent expenses, right? But listen, I've got all sorts of other credits. I probably have, at this point in my life, probably 15 or 20 credit cards. For the most part, I either use them for pleasure so I can rack up points, or I'm using them for business. In fact, I use it most of the time for business. Now, I remember when I checked my credit for the very first time and I saw that one of my 3 scores was a 660. And I was pissed. I'm like, why isn't it better than that? Like, I haven't made any mistakes. Who's even making this crap up anyway? Like, who's determining what my score is? Well, here's actually how they determine it. Your FICO score really comes down to 1, 2, 3, 4, 5 different components. The first one is, how much debt are you actually carrying on credit at any given moment? Because by the way, if you carry a lot of debt, it's going to hurt your score. And if you carry little debt, it's actually going to help your score. If you carry no debt, it actually hurts your score because they're not really seeing that you have a chance to be responsible with your credit. You also have 15% of your score based on the length of credit history. Like if you just got your very first credit card today, you have history of none. So guess what? That's going to reflect poorly. But if you've had credit for a long time and you've been using it responsibly for a long time, that's going to increase your score. 10% of your score is going to be based on new credit, as in, do you have 3 lines of credit, 10 lines of credit? Are you going to like every department store and then getting a 10% discount by using the in-store credit card that you're opening left and right? I'm going to tell you right now, that's going to slam your credit score down. A lot of people don't know that. 10% of your credit is going to be based on your credit mix. Like, do you have certain types of revolving lines of credit? Is it credit cards? Is it a home equity line of credit? What kind of credit are you actually using? And then check this out. 35%, a big chunk of it's going to come down to your payment history. Do you make your payments early, on time, or late?
You're late.
Do you sometimes miss payments? That's going to kill your score really, really, really fast. By the way, if you want to learn more about the FICO score and how the government is changing it right now, you should definitely click over and watch a video I just came out with. It's revolutionizing how much credit you can actually get your hands on, and it's not a little, my friends. Let me talk about each one of these and the do's and the don'ts. Let's start first with your credit history. Number 1, if you've got a line of credit, a credit card, and there's a payment due, you make sure you get that payment in early or latest on time. Because guess what? If the post messes up, things don't go in the mail the proper way, or things are a day late, doesn't matter how good or how bad your excuse is, you're the one who's gonna suffer, and there's not a whole lot that you can do about it. However, if you want to build up good credit history, here's what you should do. Open up a checking account. This is going to reflect on your credit. Number 2, you should always get at least 3 credit cards, 3 lines of credit. And then number 3, I do not want you to go to Best Buy and just go and buy a bunch of crap. I want you to buy simple things like groceries and pay for gas. And then I want you to pay it off every single month. When you're brand new to credit in your 20s, what you want to reflect to the credit bureaus is that you can open up multiple lines of credit. I said 3, not 1, not 2, and not 5. 3 lines of credit, and that you can use them in simple ways and that you can keep them paid off. This will show great history for that 35% of that score being handled responsibly. Next, let's talk about the total amount of debt. Remember, 30% of your score is going to be impacted by how much debt you have. Now, there's something called a utilization ratio. Don't let that term scare you. It just means how much do you owe total in all your credit cards and divide it by the total available credit that you have. For example, I have $1,000 in debt, but I have $10,000 available. That would mean that I have a 10% utilization ratio. And I'm going to tell you right now that it's super healthy if your amount of debt is less than 30% of what's available. On the other extreme, if you're maxed out or you're like using 70% or more of what's available, it's also going to reflect negatively. It's going to hurt you. Here's how you actually calculate your utilization score. Let's say that there was a credit card balance of $4,200 spread over all of the cards that you had, but all of your cards combined had $10,000 available. $4,200 divided by 10,000 would be a 42% utilization ratio. Now in this example, remember, you want to be under 30%. Once you go over 30%, it's going to start affecting your credit negatively. And if you max out your credit cards and can't pay them off, it's definitely going to ding it up quite a bit. And if that went over your head and was too long and you didn't read, basically what I'm saying is that even if you have a high credit score, keep your spending under control. 10% of your credit score comes down to that length of credit history, and Lexington law explains that ultimately your length of credit history is calculated over 3 different variables. The first one is, how long has your account been open? If you've had this credit card for 3 years, that's a part of what factors into this 10%. Another part is how long specific types of accounts have been open, because some are installments, some are revolving. And then lastly, how long has it been since you last used these accounts? If you open a credit card and don't touch it for several years, that doesn't necessarily give you a positive credit score because you're not really using it. You're not really doing anything with it. 10% of your credit score, remember, comes down to new credit. And I want to share with you why. When you're brand new to the game of credit, you can go crazy opening up accounts left and right. Here's what you may not know. Every time you open up a new account, it's actually classified as an inquiry. And it usually dings your credit 3 to 7 points. And so if you were to go and apply to like 10 different places for credit, you could actually pull your credit score down 30 to 70 points. That would be nasty.
He's a nasty guy.
Now, ultimately, it is going to come off, but not after being there for a period of time. So it's super important that you get credit in a responsible manner, that you don't just flippantly just try to open it left and right. Like if you go to the Gap and you want to get 10% off your $30 purchase, like, I'm going to save $3 if I open the credit card. It's not worth the credit ding. When it comes to your credit mix, the credit bureaus agree that you should have somewhere between 8 to 12 different types of lines of credit that are open. They don't want to see credit cards only. They also want to see the typical stuff that most people have. For example, with installment credit, this is having things like mortgages or student loans or auto loans or personal loans. And basically, you have that loan and you're making the same monthly payment every single month until it's paid off. But then you also have your revolving lines of credit. That's like a credit card. If I don't use it, nothing revolves. Or if I decide to rack up $1,000, I can make my minimum payment and I can maintain that debt over time, or I could make a payment and pay it off. So the amount isn't fixed. It just changes based on the way I use that credit. And they claim that if you have somewhere between 8 and 12 total lines of credit, that is how you optimize that 10% on your credit score. As a side note, just because they tell you that 8 to 12 lines of credit is good overall doesn't mean you should actually go and use your credit unnecessarily for things that you don't actually need.
I don't need it. I don't need it. I definitely don't need it.
And that, my friends, is ultimately what gives you your FICO score, your amount of debt, your payment history, credit mix, new credit, and length of credit history. And I've just given you a ton of pro tips so that you can actually raise your credit. But what if your credit is bad? And does that mean that you can't become an investor and that you won't be successful in life? No, but it does mean that there's a couple of things that you should do, 3 specifically. Number 1, start using your credit responsibly now, as in like, well, I've already missed a bunch of payments, a couple more won't hurt. Stop it.
Stop it, please.
Get on top of it, start making your payments. Number 2, enroll in some credit repair. There are tons of companies out there that you can pay $500 to $2,000 to that can do amazing things to help you overcome bad credit and actually get that score raised. And it's not just about bad credit. As an investor, every time I buy a home, when you use your credit, it can initially drop your credit. I sometimes in the past have used Credit Report just to maintain my credit and bump it back up. It's not always that I was making bad choices, it's that I was proactively using it, and Credit Repair has its place. But number 3, and perhaps most important, you need to understand there is always a workaround. Do not put your financial life on hold for your credit score. That would be like taking advice from your pocketbook of whether you should or shouldn't buy an investment property. Because I'm telling you right now, I built my wealth without money and without credit most of the time. As much as I love to use credit to make money, you're eventually gonna tap out. Like, did you know that most banks are not gonna let you get loans on more than 10 pieces of property? Some banks it's only 4, but you know what? There's always a workaround. How do you buy real estate without credit? How do I build businesses without credit? I'm gonna tell you right now, in this video right over here, I take you on a journey and I show you exactly how I bought my first 25 homes. I used my credit on a couple of them, and after that, I built my fortune and I built my wealth without using any credit at all. Check out this video, it's gonna show you exactly how I did it. Above all, know this: never build credit just for the sake of building credit, because unused credit is not an asset. In fact, what you really need is a game plan. How are you going to make your next $1 million in real estate? Or how are you going to start a business and build a 6-figure residual income? If you don't know the answer to that, then let's get some motivation for building some credit by getting that game plan in place right now. In fact, if you click the link below, you have an opportunity to connect with a member of my team, and all you have to do is share your goal. Whether it's, hey, I want to make $5,000 or $10,000 a month, and Kris said you could tell me how, or it's, how can I use my credit or somebody else's credit to buy my next real estate deal and work on making that next $100,000. If you want to know how, click the link below, my team will show you. Hey guys, this is where I live today. Guess what? I bought this home without credit. And by the way, I've done that now hundreds and hundreds and hundreds of times. If you want to know how, go ahead and click this link. You're going to be glad that you watched it, because I reveal your game plan, just like mine, on how you make your next $1 million in real estate.